Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, national underwriter for Old Capital. And joining me today, well, it is not Michael Becker. Michael Becker is on assignment. He couldn't join us today, so he is not going to be with us, but he is here in mind and spirit. Today in the podcast, I think you'll really enjoy it because we have captured some time of a new multifamily owner, and we really want to talk with him a little bit about how he did it. He has a full-time job. He bought a building just last month and the month before, and we want to kind of figure out how he did it. So I want to welcome everybody to the podcast and have Lane Beene say hello.
Thank you, Paul, for inviting me, and thank you to your audience for humbling me to think that they would have something to listen to.
Well, Lane has a full-time job, and it's not your usual full-time job in an office or a classroom like that. His office or his classroom is at altitude. Tell me a little bit, Lane, about what you do for your full-time job.
Absolutely. I've got one of the best jobs going. I've been in the Air Force for almost 24 years, and the last several years I've been in the Air Force Reserves. And my position in the Air Force Reserves is a officer and F-16 pilot.
So you're the guy who actually flies the airplane at altitude, the F-16, and God bless you for your service. We do very much appreciate that. But this is kind of a side job, would you say, doing the multifamily business?
Well, it is. I've been a real estate investor for almost 15 years. Most of that time was within single family. And in the last several years, I've tried to transition to multifamily property. And so that's my concentration now is on multifamily property.
So tell us a little bit about your history. I mean, you went to the Air Force Academy. You now work for the Air Force. You're a pilot for the Air Force. You found yourself your first multifamily transaction that you closed on back about a month or 2 months ago. Tell me a little bit more about your background, Lane, and so I have a little bit better understanding about who you are and where you're coming from.
Great. Well, I've served in the Air Force across different parts of the country on active duty for almost 10 years, and then I left active duty and came to the Air Force Reserves here in Fort Worth. And I'm from Fort Worth, so it was a real easy transition in that decision. So I live in my hometown. I fly F-16s. I have an awesome job. And several years ago, I just had a natural interest in fixing up my own home and doing home projects. And so that kind of got me interested in buying and improving single-family properties. And I did that for about 10 years, and I still have some single-family properties. But then I realized that most of the investors go to multifamily property, and so that's kind of started to pique my interest more. And in the last 5 years, I began to search for and try to purchase some multifamily properties. And I was doing that really by myself or maybe with just one other investor. And we would go and look at properties, and we would put together our underwriting, with our analysis of these properties, and then we would submit, when we thought it was a good opportunity, a LOI, a letter of intent,
okay,
an intent to purchase the property. And we got close on several occasions, but most of the time we were just underpowered. We didn't have enough capital. We had a very small network of people that we knew, and we weren't able to close the deal. And so that happened for about 3 to 4 years of my multifamily property. And so I came to Old Capital under some advice on how to get the next property solved or how to be successful acquiring the next property. And Paul's recommendation was you need to partner up with some people. You need to expand your network and take your book knowledge to practical knowledge. And so I joined with some other investors, and that was about 2.5 years ago. Got some practical education, got some hands-on experience, some more property tours, and then just this last, about 3 months ago, I was able to get a contract accepted and close a property pretty close to where I work and where I live, and it's a smaller property, and I've had it for about 2 months now.
When we say smaller property, how big is that property?
Right, it's on about 3/4 of an acre. It's 2 buildings, and it's 22 units, composition of 1 and 2 bedroom.
And this was your first multifamily transaction you did. So you didn't want to start off with trying to do 150 or 200 doors. You wanted to kind of have a little bit of a baby step. And you bought, let's say, a 22-unit building. Now, how would you classify this property? Is it an A, B, C, and how do you classify?
Sure. Well, this property is a very unique property. It's an older property. It's in the art district of Fort Worth called the Cultural District. And I would classify it as built in 1962, and most of the major systems, electrical, plumbing, roofing, foundation, are of that vintage. They're of single, or they're of an older vintage that you don't find constructed today. And so it's an older property.
So in your mind's eye, let's take a look. We have Dallas and Fort Worth, properties over in Fort Worth, and it's an area that was probably built in the 50s and 60s and 70s. These properties, these are vintage. It's a vintage area. So I would really actually define that area as maybe a A- or a B+ area. It's an area that has big homes, brick, something that the single families in the area would be. What do you think the homes would be valued at around that block?
I think in that one area, like you described, Paul, very upscale, an area that is under renovations and under renewal, and this property is right in the heart of that. So it's an area that is really unique because there's not a lot of property. The properties that are being built multifamily are either brand new construction, high-rise sorts of properties, or they're what I have, an older vintage 1960s, maybe mid-1960s property, and that's what this is. And like I was mentioning, the plumbing system is a little antiquated. It's of that vintage. The electrical system needs some upgrade work, and so I would say that when we took the property on, it was a C-class property because of those subsystems and also because of the condition that it was in.
Yeah, I would actually probably say it was a C- condition in a B+, A- area. The homes in the area would probably be valued at right around about $600,000 or $700,000. So it's a nice older property with big, tall, matured trees. It's an area that you would want to live in that part of Fort Worth, Texas. So it's a very nice area. And so Lane and his group bought this property. So tell us a little bit about, how did you find the property and how did you actually become, because there's so much competition in the market these days, how did you become the winner of the property? How did you capture the flag?
Yeah, great questions, because how did I find the property? I found the property through an advertisement or through a listing with one of the local brokers. And I had seen the property. I knew exactly where it was, and I knew that the area was, like you described, a very affluent with single-family residents, but I didn't know exactly the composition of the multifamily properties. And in that one area, there's little corners of zone multifamily that have been there for 20 or 30 years, surrounded by single-family properties of an older nature that have been repaired well and that are very desirable. So I didn't know exactly the market for multifamily in this property, although I knew the single-family properties and the residences were just selling at a very high price. So I was excited about the area. I found the property through an electronic email distribution list from one of the brokers, and then I held it for a while. I didn't think that it was going to be a good property because it was a little bit smaller than I initially had targeted. I wanted something, like you mentioned, maybe 50 units that would allow me to put full-time employers there, or full-time workers there, because like you mentioned already, I have a full-time 40, 50, 55-hour job per week, and I don't have a lot of extra time to commit to extra hobbies or extra businesses. So to go back to that answer, this was not something that I initially was targeting. I really kind of looked past it until two of my other investor friends, who also own multifamily as lead, pointed it out and said, you may want to look at this. It may be a good opportunity. And as the second guy did, I said, I need to take a look at it. And I did. I called the broker. I had a conversation with him, and it just to me sounded like a good deal. And the primary thing that got my attention was he said, this area is dynamite, which I already knew. And he said, the rents are at least 50% below the market.
50%,
50% below the market. And there's an opportunity to go in, improve it, and then raise rents substantially.
So you live in the Fort Worth area, the property's in the Fort Worth area. You were not looking at properties, 150, 200, 500 miles away. You were just kind of concentrating on areas that you had a comfort level that you could drive 15, 20 minutes away from your house. So you could be on top of the property. So you weren't out looking for, kind of diamonds in the sand, so far away. You were looking for someplace that was fairly close. Second is that you signed up for electronic emails to come from the broker. The broker would probably send out maybe one or two properties that were going to be listed for sale a month. And this is how it came to you, is that you got it just out of an email from a broker that you had signed up for to receive these emails. And then you got engaged into the transaction. Now, you guys put out a letter of intent into the deal. Did they, right from the beginning, take your letter of intent and run with it? Or was there a lot of competition on this one?
Well, from my point of view, I was working with my agent and the agent-to-agent transactions. After we had been accepted our contract, they went back and had more of a little bit open discussion on the negotiations after it had closed. And this particular property, I think, during the short period that they marketed, had a remarkable amount of interest. I don't know specifically how to compare that to other properties, but they said that it was 150%, or there were quite a few offers on this property. I think there were almost 13 written offers.
Wow.
And there were 4 or 5 that made it to the final round, of which mine was one of those rounds.
And what do you think, what was the reason why you got the offer to buy the property from the seller? Was it the best price, or did you go hard on money right from the beginning? What was some of the terms that you used?
Well, I think I had a pretty good understanding of what the property could be. So I was fairly aggressive about my offer, both in the terms and also on the offer price. And then I think I tried to be very receptive to feedback from how my offer was being accepted. And so I was attentive to that. And then I think I tried to make a pretty good adjustment to capture the property.
Okay. So the terms are important. So typically right now is that the best price sometimes wins, but sometimes the best terms would be to try to close within 45 days or go hard with money, transfer the earnest money to going from your pocket to the seller's pocket, whether it's $15,000 or $20,000 or $25,000. I mean, the seller kind of wants to make sure that you're a little bit pregnant, so to speak, into this deal. So they want to make sure that you have hard money that's at risk, like they have the property. What the backstory is, again, on Lane's transaction, is the seller had owned this property for how many years before he sold it?
This was a California owner. He had owned it for 10 years, an older gentleman, and had visited the property one time.
So really an absentee landlord on the property, really had no idea on how the property operated, really never saw the property, and just received operating statements from his management company, and that was pretty much it. So you live, in the same submarket itself. Your investors live in the same submarket of Dallas and Fort Worth. So tell us a little bit about, you guys do the LOI, and then the transaction's awarded to you. And now what happens? Do you do a physical inspection, or you just close, or how does that work?
So once we got the contract accepted, and then we had 30 days to do a feasibility evaluation to ensure that the property was in the condition that we expected it to be in. So we immediately scheduled inspections and all the other things, the open review of all the financial documents. And then I hired some people, and I also enlisted some support from other network individuals that I had been working with, some of which were going to be my investors, some of which were my friends and associates. And we went through the property as closely as we could to try to look under the rocks, look behind the logs, lift up the rugs, and find out if it was going to be in the condition that we expected it. It was an older property, 1962, so we did expect to find some problems, and we did find some. But we did find 2 fairly significant issues that we had to go back to the listing agent and kind of work through.
Give me an example about what you found and what was the disposition of what you found with the seller.
Okay. Some of the things that you would expect to find, some potential signs of termites and just smaller items, nothing that was a show-stopping item. But the biggest item, and there were one of two, was one, the square footage that was listed was inaccurate. And it was just an oversight, I think, from an owner who didn't have very accurate blueprints or didn't have a very accurate measurement. And it was about a 20% error in the overall calculated rentable square feet. So that was going to make an impact on the sales price because it's a dollar per square foot calculation. And if the square foot is smaller, the dollars or the potential rents may not be as high. That was the first issue that we had to go renegotiate on. And then the second issue came up during the physical inspection. And so we had hired an electrician to come out and evaluate the electrical system because that's obviously a professional requirement. And so we went, and the gentleman recognized that the circuit panels were of a outdated capacity, or they were a one that basically was known to be hazardous.
One that would burn down your apartment building.
Right. Not in use now, known problem in the past. And so that was an issue that we identified to the seller. And they were aware of both of those issues after we brought them to their attention. And then that opened kind of a second round of negotiations, because had we considered those two things or known about them, then we probably would have adjusted our price accordingly to compensate for them. And so we opened up negotiations again, and we were able to get a price compensation for those items.
So you got a reduced price from what your original LOI was that you went under contract on. So the seller, it was a win-win for the seller. The seller wanted to sell. They gave you a concession on the price. You wanted to buy, but you wanted to buy at a lower price. So you get all this stuff done. Now, what do you do next after you have the terms tightened up a little bit?
So now we had the sales price agreed upon. From that point, we had about 45 days or 30 days until we were going to take ownership. So now it's time, or what we tried to do to the best of our ability, was get all of our plan and our strategy in place so that from day one, we would be ready to enter the race at full speed. And so what I did was, and this property, like I'd already mentioned, is built in 1962, and it really hadn't been maintained at least for the decade that the previous owner had. He had made repairs as required, but very few maintenance items or very few preventative maintenance steps. And so I knew going in that there was going to be a lot of repairs and maintenance and replacement items that would be necessary. We didn't know all of them because we only had a half a day or 3 days on the property, but we kind of utilized what we did see and then extrapolated that if this was the case, let's just assume that these other things are going to be defective also.
So you created a kind of a rehab budget on the property. Give me a couple ideas and kind of line items and costs that you had on the rehab items.
Sure. So like I mentioned, this is an older property, and really it wasn't very difficult to determine what needed to be repaired. And I can say that by saying everything needed to be repaired or replaced or at least evaluated fully. An example, roof was a calico cat of patches and problems and water leaks. So immediately we knew that the roof was going to have to be replaced. And there's all kinds of different directions to go because we had two building complex. One building was flat roofs. The other building was a pitched shingled roof. And so what combinations are we going to put there? What type of roof structure and those sorts of items. So roof was a big issue that we knew we had to solve from the first day. The other problem was the trees and the landscaping was very mature and is really overgrown. It looked much like a forest. And so we knew we had to go and take care of those items. Several of the trees were very iconic trees, beautiful pieces of the landscape that gave the property really its personality. And one of the best things we did was, in leading up to those days prior to taking ownership, is I hired a landscaping designer to go in and evaluate what we could do with the property. We can't change it into Augusta National, but we did want to make some improvements in how to trim. So Lane's idea was to just go out and shape these trees up, cut them back where they needed to be. but under the advice of the landscape designer and who was an expert in those areas, said what you really need to do is you need to take these trees completely out. And I said, boy, they're so iconic. Why would you want to do that? It would really change the look of the property, and they're beautiful. And her suggestion was, these trees are very dangerous. They're very old, and they're in poor shape. They're in decline. And in the next 3 to 5 years, the limbs are going to fall, and the limbs themselves were 10,000 pounds, or the trees are going to fall. And so I thought about that for a while, and I realized that was really good advice. And when we cut the trees down, one of the bigger trees that was right in the center of the courtyard, probably the iconic tree of the whole property, in diameter it was at least 6 feet across. But as soon as we cut it down, it probably had 4 of those 6 feet that was completely hollow. Wow. And so it was going to fall over had we not taken down. So outstanding advice. And what I recommended to some of my other friends who are following my steps, or your listeners who may be, is hire people with experience and that can offer you advice in areas that you don't have the expertise. Just because you have an experience with cutting trees back on your own house doesn't mean you have the expertise to make determinations on this sort of thing. And that person's recommendation, I think, saved me a considerable amount of trouble, and it saved me a considerable amount of money. We took those trees down, and the property looks 1,000% better now.
It does. I mean, it used to be a shaggy dog. Now it's a well-trimmed dog. So you talked about the roof. You talked about the trees. How about the interiors of the property? You know, the fixtures, the carpets, the bathrooms. How much money went into those things too? Sure.
So this is a jigsaw puzzle of a property, because from the front curb to the back fence picket, it almost all had to be addressed. Not all of it had to be upgraded. Not all of it had to be replaced, but the majority of it, all of it had to be evaluated, and most of it had to be addressed, either through just replacement or through repair or through some type of improvement. And so what that led us to do is almost build a stepping stone, lily pad type of approach. We know we couldn't get to the interior bathroom design until we were able to resolve the problems on the exterior. And so what we did in that point where we got our contract accepted until the time that we took ownership is we looked for the big alligators. What alligator was going to kill me and get us first? Mm-hmm. And that was kind of some of the exterior issues. And we got those resolved. We got 3 or 4 different contracts, and we got some advice from different people, and then we tried to lock that up. And then from there, we had so that was a concrete tactic or plan that we were going to be able to execute on day 2.
Now, does this not sound like a fighter pilot to you?
I love those words. They have wide applicability. And then on day 3 and week 2 and week 6, we had an idea of what we were going to get to at that point. But like I mentioned before, I worked 50 hours a week already, so I didn't have, just an elaborate amount of time to spend to this. And so I had to trust and delegate some of those plan designs and some of the execution, all the execution, to contractors and general property managers. So I've kind of gone around this a little bit, but basically the answer to your question, what did I do from the time it closed until the time I took over, was I got those plans in order so that when I did take over, I would be ready to enter the race full of gas at full speed, mm-hmm. knowing that some of the decisions I was not going to be able to make until we resolved some of the bigger issues like exterior, landscaping, roofing, electrical. And then in the budgeting of those items, like you had asked me before, we were going to put in about $21,000 of upgrades for the entire property per unit. So it's a very expensive upgrade that was roughly about $500,000.
Wow. So 20-some unit building, $500,000 worth of upgrades to the property. This is probably a leading question about what were your rents and where do you think the rents are going to go to?
Right. So when I tell people that have multifamily experience, they do what you just did. Your listeners didn't see your jaw drop to the floor because that's an enormous amount of money for most multifamily rehab budgets. And it is a lot of money, absolutely. But what you said not several minutes ago allowed me to do that. And two things. One is when I mentioned the rents were 50% below what the current market rents were. We have a series of 1 and 2 bedroom property, and they're about $500 to about $650 is the range of those properties. But there's another property right next door that's 10 feet away, and it's a smaller 12-unit complex of 1 and 2 bedrooms, and those rents are $900 one bedroom, $1,100 two bedrooms, and they had been improved. And so I felt like that if we could improve and provide the same product, that we could at least get to the $900 or the $1,100 rent range. However, we had to improve the product, and we had to provide the same quality level, and in doing so, it's an expensive acquisition. That's the rents 50% below. And what you had mentioned before about a C- property in an A location allowed me to do that. It allowed me to put that extra money and that big budget into this dilapidated complex, knowing that it's really an A market and there is a lot of demand for a property and good product in this, and they're willing to pay for it. I knew that because the property right next door was fully occupied and other surrounding older properties were fully occupied, and the ones that had been upgraded were occupied at a higher rent rate.
Wow, very interesting. Tell us a little bit about how you structured the transaction. First of all, let's kind of talk a little bit about, was it just you buying the property, or did you have maybe a partner or some investors into the transaction? And then let's talk a little bit about the loan itself and what kind of loan did you get?
Good questions. So I had been looking for properties for a long time, and I had been cultivating partnerships with people that were interested in my investment strategy, a value add, buy a distressed asset, make improvements, sell or refinance. And so I had been talking to other investors like myself who had that like mind strategy, and we were talking about different properties. And so I was already starting to try to put people on my team of other investors or other members that I knew when the right property came that I could count on them to partner with me. And so I had a group of 5 to 6 dedicated supporters that I was reaching out to, kind of giving a debrief, if you will, of each property that I had seen. And most of those, either one wasn't really a good match for me and my group, or it just didn't work out and I wasn't awarded the contract. And so when we found this property and I went and looked at it with the broker and I went and looked at it on site, I thought this may be a good opportunity. And so I immediately reached out to them and engaged with them and said, we don't have a contract yet, but it's looking positive. These are the things I like about this property, and are you interested? And all of them responded back and said, of course they are. And so I had about 3/4 or half the team built, or really kind of on my sideline, prior to really even inking the contract. Once I inked the contract, then it was just a matter of fill-ins on other smaller amounts of funding. And so that was a really helpful and a really good situation because I didn't have to look very hard for other investors to help me on this property. And in fact, when I went to work on the financing part of it and make sure that the appraisal and make sure that all of my investors were qualified correctly, I was really overfunded. And so I was planning to set this loan up for a 70 to 75% loan to value based on the acquisition price plus the rehab. However, there was so much interest from other investors that I was going to have to turn their money back, and in an effort to get that 75 to 25% loan to value ratio. However, after thinking about it a little bit more and talking to other people, those investors were going to lend me their money at no interest rate, whereas the bank was going to lend me at an interest rate, although it was a low and good rate. And so I decided to change that balance a little bit and rely a little bit more on the investors' money, which they were willing and interested to contribute and reduce the value of the loan that I was required to take.
So by the end of the day, what was the loan or the leverage in the transaction?
At the end of the day, it was 50% loan to value.
Wow. And that was based on the acquisition price plus the rehab times 50%.
That's correct.
Okay, great. And the terms were pretty good?
The terms were from a local bank, and it was a recourse loan, 25-year with a 10-year term. 4.85 was the percentage.
Okay.
Interest only for 1 year or just short of that 1 year, and then it would be interest and principal.
Okay, so that's not bad. So really not an opportunity for a non-recourse loan because it was a smaller transaction. It was really Lane's first or second transaction that he has bought into of size. So he had a couple of guarantors that signed the loan with him in the transaction, and he had a bunch of investors, limited partners that put their money into the deal itself. So right now they're into it for probably about two months or so. I had an opportunity to go drive the property a couple of days ago and thoroughly impressed about the state of just the physical property itself and what it looked like before and what it looks like today. One of the things I thought was kind of funny is that the property sides a nice, large regional bank. Just the side of the property needed a brand new fence. And Lane, how did that work out for you? What did you do?
Well, the whole area is just in a renovation. And so there's a lot of older property. In fact, it's almost all old. But most of it has been repurchased and it's been repositioned for a very upscale and a very trendy and a very desirable place to live. It's about a mile from the Kimball Art Museum and the Arts District, which is a world-class museum and other things. So kind of give you an idea of the general types of people that would go through that area. Well, the bank right next door, again, borders our property, and it looked like a overgrown forest. It looked like a jungle. The trees that I'd mentioned, there's a power line or utility easement between that has numerous power lines and phone lines, and the trees had just basically pythoned their ways, their limbs and branches throughout this utility lines, and including up on the property and the structure itself. And then the fence looked absolutely horrible. It looked like a pirate ship strung together. And so I thought, well, this is going to be a benefit to my property to clean this up, but it's also going to be a benefit to the bank. And so I reached out to the bank and I said, would you guys be interested in partnering with us to clean this eyesore up that will benefit you and will benefit us? And they said they would. And so we kind of talked a little bit about the concept of what I intended, and they were all on board with that and very excited, really, that finally they had found an owner that was willing to make some positive changes. And we did, and it looks fantastic.
So the bank ponied up some money. Yes, they did. So again, when I looked at the property, I took a look through some of the units that Lane and his team were updating and upgrading inside, and I think they've done a great job. They've kind of redesigned some, a unit or two that looked like X, and they transformed it into Y with some new cabinets and new countertops and new windows. And so they've done a wonderful job just on the start of this. And I really want to kind of visit with Lane probably about maybe another 6 months or another 12 months to get his perspective and have me go back out there and take a look at it. And we kind of sit down, maybe we'll do another little podcast to give you everyone kind of an update of what he is doing. And Lane, if you were to look back, say 2 years ago to, where you were to what you are, what really was the determining factor? What was the input of how you were able to go from that to this? Was it just determination? Was it a passion for what you want to do? What is some good advice for somebody that wants to be like you?
Well, that's all good questions, Paul, and I hope that your listeners And I'm sure many are running into the challenges of trying to buy a multifamily property, especially in today's market where there's so much interest for these properties, and you can find both good properties and good investments, and not always are those the same thing. But my advice to them is you just have to be persistent. You have to get up every day and have deliberate action consistently applied. And I mean that because there's so many times where I felt like I had taken the biggest cut I could at the plate and struck out. And you just have to make the determination, if this is what you want, that you're going to go back up to the plate and swing again. And these multifamily properties, as you get into them, can literally be Goliaths. And you think that it may take an army of soldiers to take one down, and you don't know any soldiers, nor are you a soldier. But if you remember the story of David and Goliath, David beat Goliath with 5 smooth stones, and he just used one in a slingshot to take him down. And I say that because all you need to do is you need to do a deliberate action every day, okay? Whether that be educate yourself, talk to someone, gather your team, and continue to make your strides every day to get closer to buying your first multifamily property.
That's great. Some great advice, Lane. I certainly do appreciate you being in the podcast today. I think we're going to try to revisit with you in about 6 months or 12 months and kind of get a better understanding about where you're at in this process of buying this property, and kind of look forward to the future about what you're going to be buying next. What do you think you'll be buying next, Lane?
Well, this has been a fabulous opportunity. It's been a lot of fun. It's been very exciting, and I'm just really looking forward to taking this project to completion. I expect that to be 3 to 4 months for the repairs, and then some time after that before we're able to get the right tenant base in there and get our financial position stabilized with a little bit higher priced tenants. So that's kind of my short-term goal. And then outside of that is I'd really like to duplicate what I've done here on a slightly larger scale, slightly larger property, but take some of the lessons that I've learned from this transaction and this event and apply them forward to another property.
Lane, when you fly these jets up at altitude, it's not you by yourself. It's a huge team that's behind you. It's not only the air traffic controllers. It's not only the people that are on the ground that are fixing and fixing your avionics and the mechanics of the properties themselves. It's your team that you've kind of put together. So it's, having a team of whether it's your lender or your insurance company or it's your rehab person or it's your landscape architect. I mean, having the right team, puts you in the best position to win the battle, so to speak. If people wanted to reach out to you, Lane, what's the best email address that they could reach out to you at?
Sure. That's any questions I'd be happy to answer and share my experience with. And they can reach me at my email, which is pilot.properties@sbcglobal.net. So
pilot.properties@sbcglobal.net. Lane, thanks for your service, not only in the podcast today, but in the Air Force and in flying the F-16. We do appreciate it. So again, thanks for your time, Lane.
Thank you.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.